Cheers. Hey, it's Friday. What do you want to do today? Forex? Hey, it's Friday. World's reacting to overreacting. Hey, great. Nice. Good opportunities to be out there. Hey, by the way, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Namaste. What's going on? I'm going to take a look at the charts today, do technical and fundamental analysis. And then I guess I need to meet with the swing trading group soon. And then I need to move to Cambridge. So busy day for me. I'm already missing you. I'm going to have to find out how I'm going to do non-farm payrolls from campus. How will I do that? I don't know. I'm going to have to figure all that out. Maybe I'll do some surprise webinars once in a while I'm gone. If you want me to broadcast now and then from campus, I think that would be fun. I don't know what I can promise, so I can't promise you anything. So anyways, today we'll just take a look, do what we always do, look at the charts, see what's going on, find our price levels, try to guess on time, try to set things up. Yeah, Chuck Deck says in one of those soundproof rooms. The problem is there isn't very many of them. And since I need to be in those rooms at like 7:30 in the morning, sometimes the library is not open because it's on summer hours. It's not 24 hours. So they're like, hey, man, no one uses the library in July at 7:30 in the morning. I'm like, but I need it. But anyways, I'll try what I can do. And then speaking about summer school, I mentioned that I'm setting up an option for you guys to study Forex, and I've done that. So make sure you remind me to give you the coupon code and the page to do that. Both video training if you want it on demand, or live training if you want a structured group and one-on-one training with a human being. So anyways, I got all that set up for you because you're my sweet baby. Which books did I read regarding oil? Yurkin. Google Yurkin. I forget, Daniel Yurkin maybe. And he wrote two, The Quest and The Prize, I think were the two books. I read a few other things on like green energy. I read a few on fracking and that kind of stuff, but those are the main ones. Okay, Joel? Regarding the oil industry and the history of oil. Completely fascinating. Now, buy those two books if you want. Or again, The Prize and The Quest. And then read them in less than a month and write, I think I wrote 11 5-page papers. Do all of that in a month. Have fun. You're so crazy. What's up, B-man? All right, so anyways, let's get on with it. And don't let me forget those other stuff. Oh, by the way, please like, please subscribe. Let's go through the normal stuff. And Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Please visit Trader's Way and say, hey, Trader's Way, I really appreciate these webinars in my life. Thank you very much. I'm opening up a demo account today, Trader's Way. But one day, when I feel confident, when I feel strong as a trader, I am going to choose you to be the prime broker for my new successful Forex trading business. Thank you so much, T-Dub. Please do all that too, okay? All right. A weekly podcast for energy. I don't know if I get a podcast, but I think it's the EIA Weekly Outlook. So go to the EIA website, take a look. Real boss. Yeah, I smoked a cigar yesterday, so I must be a boss. Okay, anyways. No, I haven't sent them out, Oscar. Okay, let me just do it now then. I have it teed up somewhere for you guys. Here's the summer school program. Okay, it's a really simple page. It's a video that explains the two buttons, the video training course, the live training course. So you can choose what you want, okay? And they're both $695. Bajillions of people before you have paid more money, significantly more money. If you buy the videos individually, I think it's like $3,800 or something crazy. But anyways, $695 is pretty reasonable. I spend more than that in a day, probably. So cheaper than Harvard, guaranteed. Cheaper than Harvard. But anyways, that'll fill your mind and your soul for at least 7 weeks of work. So there you go. Make sure the summer's make sure you use the code. Okay. All right. All right. Sir, yes, sir. Okay. Yeah. Well, let's go. So the United States almost started a nuclear holocaust yesterday. Yeah, thank you, RJ. You know, Ron, there's like probably 4 more courses in that bundle now than 2 years ago. So anyways, cool. Hey, yeah, so anyways, turns out Trump was going to bomb Iran last night. Oil prices went up. Yeah. But whatever. If you take a look at this technically, and where's my pen? Where's my pen? Where my pen be at? I guess I got to fire it up, huh? By the way, this is the Harvard Club of Boston, but I'm joining the Harvard Club of New York, which is kind of an interesting move, right? But once I'm done with school, I don't go to Boston that often. So one of the things I plan on doing, guys, is I'm going to start hosting live events in New York City. So I used to do this all the time. I'd go to New York City for a couple of days, rent like a penthouse at the Waldorf Astoria. I probably did that about 4 times. And about 10 people would come to the hotel room and trade Forex with me. But I'm thinking now, as a member of the Harvard Club, which you have to be a member. I called them like 3 years ago. I said, hey, I'm a student at Harvard. I'd like to join. And you can hear him hanging up. I'm like, hey, I'd like to join the Harvard Club. He's like, oh, did you graduate? Or when did you graduate? And I said, oh, no, well, right now I'm in grad school. And you could hear the sound of the wind. as he's hanging up on me. Click. Right? Like, did you graduate? No. Click. So anyways, so my new plan is become a member now that I have a degree. And we'll meet at the Harvard Club and we'll do Forex trading and hang out at like the ultra exclusive bar, to hang out in the lounge. Like, it's so ultra exclusive and rare to even get in the building. You're like, damn. So anyways, hope you guys want to do that. Hope you want to do that. Hang out with me in the Harvard Club. Hey, mix that with Forex. I mean, it's a good mix. So anyways, so there's that thought process. Okay, I got my pen. Let's go. So let's take a look at what's going on in the world. First of all, I always kind of like preface everything when I look at, is the world freaking out? Or is this market behaving logical and sort of behaving normal? Well, let's take a look at that. I mean, we don't really know. There was a downtrend, started at an M, great, down, up, downtrend off of a central, great, down. Then it hit an MM2, which we know would be a place where bulls might get involved, and this whole thing starts to slow down. So then we go into the next kind of wave, if you will, and it consolidates. In this particular week, it consolidates and then hits WM2, which again, we would assume bulls would get involved. Takes off, breaches the M3, goes up and hits the target area. It's gone a little farther, but right? Isn't this how we would assume a reversal if a reversal happened? Jimbo says you can have guests. Well, imagine I rent, instead of like I would rent a conference room. So you'd have to be invited now, right? You'd come in as a guest. I'm telling you, this place is like the Harvard Club of New York is as ridiculous as you could possibly imagine. Old school club. Anyways, Chuck says it's more of a monthly play. Well, yeah, but you know, a lot of these, like let's say, this is a week. Oops, let's do blue. This is a weekly play. This is a weekly play. Well, this is sort of, both of this is sort of top, bottom, bottom, top. But then this is a weekly play, right? And so you would set up next week off of here. So, you know, I don't know. Like, I'm not disagreeing with you. The monthlies were important, but also the weeklies, right? I mean, this is setting up very, very, very technically and very, very normal. We're in the middle of this range now. Like if you were going to call this a top and this a bottom, we're kind of in the middle, and you'd really have to do some serious analysis and have some serious conviction toward a bias to say that you think it's going to go this way or it's going to continue up. To me, I don't think you can really tell. So you're going to have to look at next week, next month already. But like next week, we're already here. Next week, we're already here, depending on your bias. But I'm guessing this is almost a 50-50. Okay. Now, if Iran gets bombed by the United States. So here, again, the rumor is, and I think it was confirmed, I'm not sure, but Bloomberg News reported that Trump sent an attack to Iran on its way to bomb Iran. And apparently at the last minute, called it off. For whatever reason, doesn't matter, but that he's president of the United States, it's his prerogative. So if a bomb had landed, oil would be up here. So now we have geopolitical risk in your trade. It's geopol risk. Okay. Just keep that in mind. If you're not familiar with how to play geopolitical risk in the energy complex, if there's a course of action like that, then oil's going to jump. Okay. And it has to do not with demand but supply. So let's do this really quickly, and I'll make this a little fatter so it's a little easier to see. Okay, that's quite fat. Oops, I didn't want to do that. I want to do that. Oh, but then I can't see your questions. Stupid system. All right, let me thin this down. Let's do some coloring here. All right, so we got demand. What the heck? Oh, it's caught on picture. Okay, let's try. Okay, weird. All right, so let's do this again. Demand, supply 1. Okay. So this creates an equilibrium. Okay, this is price, this is quantity. So at here, you have price 1, equilibrium price 1 at equilibrium quantity 1. Okay, so if the United States bombs Iran, this affects supply in the global market. Now, really not technically, because Iran doesn't produce a whole lot of oil for the oil market, and there's embargoes and all this kind of stuff, but it doesn't matter. So here's one of the things I'd like to study if I'm doing a PhD is like, what is sort of the math, or let's say the economic side is, well, Iran doesn't provide much oil to the world market, especially with embargoes from some countries and not in other countries and all that kind of stuff. So at the end of the day, it's really not that big of a player. So it wouldn't change supply much at all, especially to the United States. We don't buy any of their oil. But what will actually happen is the price of oil will freak out like it changes everything. And of course, it doesn't change everything. But maybe it leads to that. But you'll see that there's a let's say behavioral action different from an economic reaction. But anyways, so if we bomb Iran, if the United States bombs Iran, supply will shift to supply 2. Okay, new quantity. So there's less oil in the world. You can see this represented by Q2. Supply goes down from Q1 to Q2. But look at what happens to price. Price goes up. So this is true with any sort of threat to oil supply. This is a supply side exogenous shock. Oh, snap! Yeah, I just brought that to you Friday morning. Hey, man, how did Forex go today? Oh, well, I was looking at a supply side exogenous shock. Right? All the ladies are going to fall in love with you, son. Just mention supply side exogenous shock. So anyways, in this case, if there's like a hurricane in the Gulf of Mexico, supply side exogenous shock. If like things like when Venezuela goes from 10 million barrels a day to 0 million barrels a day, boom, supply side exogenous shock. Supply goes down, prices go up. If there's in Libya, there's an attack on an oil refinery, boom, supply side exogenous shock. Riots in Nigeria, supply side exogenous shock. So on and so forth. Okay? Yeah, an oil tanker bombed. Yeah, boom. Supply side exogenous shock. Anybody going to Google that? Probably find some cool stuff. Yeah, Chuck, look, I'm sure that happens all the time. All the time. So anyways, what a great thing to do on a Monday morning, huh? Busting up some charts, supply side exogenous shocks. But, so if that happens, now you know the reaction of oil. Supply goes down. Well, and here's the funny thing, and this is what I was alluding to. It doesn't actually have to happen. It's just, it has to be assumed. There's a fear of supply shock. That's enough. Okay. So, but I look at this, and this is just doing what it's supposed to do. And what do you think I am for oil? Do you think I'm a bull, or do you think I'm a bear? Look at all these people saying a bull. So do I have a bias? Yes. Could I defend my bias? One would assume I'm a bull, and I could defend it. Then how do I put trade plans together then? Well, I would have looked to have bought here and would have broken even because, you know, I would have been slightly profitable for 3 days. I would have tried buying here, and I would have been slightly profitable for about 3 days, and once again knocked out a break even. I would have tried buying here, a little dangerous, got the right price, but I would have kept my cards close, kept my pips close. Didn't work out for me. I probably would have lost money here. Okay. I would have tried buying in here. Again, it was profitable for a day, maybe 2, got knocked out of break even. Okay, great. Would have tried buying here, would have made money. Next week I'd try buying here. Right? And you do this week after 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 week. And on the weeks the market agrees with you, you do very, 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 very well. And on the weeks it doesn't agree with you, you probably break even or lose a little bit of money, but not nearly as much as you make. Okay? That's the message I'm trying to get to you. Remember what I say. What do I say? I just lost the thought. Yes, that the markets are inconsistent and to some degree unpredictable. But you are very consistent and you're very predictable. You've analyzed the markets. You have a long-term point of view, what we call a bias. And when the market agrees with your bias, because remember, you need other market participants to move the market for you. You're not big enough. And so I'm just saying, like, you get in these situations week after week after week, doing the same thing over and over and over again, using technical analysis. All this stuff would have been based on technical analysis. But you don't know the future any more than anybody else. But, you know, you would have done fine here and 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 fine here. Not really that great. Not really that great. And okay here. Not really that great. Not really that great. Not really that great. And then you would have done fine here. And you'll probably continue to do this exact same thing for the rest of the year. And if at the end of the year, most of the time the market agreed with your bias, you're going to have a very profitable year and people are going to treat you like a genius. And if the market does not agree with your bias, you're either really early or really late, then you're not going to have an amazing year. But you'll probably still be profitable. Now, with this point of view, or with this strategy in mind, as far as a trading style, let's say, how many people here think they could do better trading this way than the way that they're either trading now or have been trading? And this is a very astute question now. I'm being very serious here. This is neuro-linguistic programming. I'm going to tell you that I'm brainwashing you right now. I'm asking you to confirm or deny if you traded consistently the way I just explained, will you do better than you have either now or have been trading up to this point? Remember, you're very consistently trading a bias. And the technical analysis just tells you the right price. I mean, that's the easy part. Yeah, that's what I read too, Forex Pipper. So by you thinking about this, guys, and then saying, yes, I would do better if I traded this way. And then you actually reach out now and type it in public where you could be ridiculed and shamed. So you have to become intellectually agreeable to this, and then you have to be emotionally vulnerable to commit to it. This is a big deal for you to do this. Because you know, when I show you how to trade, you're like, yes, this looks good. This totally makes sense. This looks really easy. Then I go away and you're like, oh my God, I don't know what the heck I'm doing. So that's why it's really important for you to admit, like, there is something that you need to add or change or alter in your trading behavior. It might not be your knowledge of the markets. It might not be the knowledge of technical analysis. It might be the way you actually trade. And one of the problems with the way you actually trade, right, is that you're looking at your trading with glasses or a microscope. What did you do 2 hours ago? And you're not looking at it with a telescope. What's this year, next year going to be like? You're not seeing the entire forest. Okay? And the entire forest could be for 2 months, you didn't do very well. You made a little bit of money over the course of 2 months. What you've forgotten, especially if you're only on a 15-minute chart, you're not even looking at 2 months. What you've forgotten is for 9 months, you did very, very, very well. For 2 months, you did sort of mediocre, not that great. And for the next 8 months, you're going to do fantastic again. And you're going to have like +7, +8, +6, +7, +2, +1, +3, +5, +7. Like this is your percent per month. Okay? If you can average over the course of a month or over a year, 5.5%, I think it is. That's 100% a year. Return. If you can average the 5.5. The best Professional traders, according to Barclays Hedge, who looks at CTAs and other types of money managers, in which we fall in, foreign exchange traders, right? So let's say you got more than $100 million, and you're the best foreign exchange trader in the United States. You're averaging 2% a month. You're the best in the United States of America. Okay. Now that's funny, Forex Pipper. No, that can't be true though. There's no way that that's true. That'd be killer though if that was true. Anyways, that's ridiculous, but you know, because you're over leveraged, you're getting those types of numbers. In fact, you're probably laughing because your numbers probably look like 17 minus 22 plus 47 minus 18, right? Those are probably your numbers. So we got to get rid of all of that and bring some consistency. And so when you actually, one last thing before I move on, when you trade the way I just explained, you'll notice that when you analyze your trading history in other ways, like risk-adjusted performance, volatility, all that kind of stuff, you will find that your results are much, much significantly better when you trade the way I just explained. Okay. Michael, that's because you're compounding. Okay. So like your first month is you turn 100K into 105K. Okay. Your second month, now you turn it into 112K. Your third month, it's 120K. You see, it's the same 5%, but 5% of 100K, then 5% of 105, 5% of 112, and 100 and 120. And it's the 5%, but it's compounding. Okay. So for that, what you should do is look at, there's a lot of calculators on the internet. I'm not throwing swap in there at all, but that would be part of it. So because here's the cool thing about swaps. So remember, I've taught you guys a lot about swaps just recently, right, in the last couple of weeks, and I compare them to bonds. Well, typically a bond gives you a coupon payment either 4 times a year or 2 times a year. Okay? In Forex, so we'll say quarterly. In Forex, you get paid daily. So it goes directly into your account. So at the end of the month, if you're analyzing your return on investment, you're probably calculating the cash in your account. And it's already collected all the swap. It's already there. Okay? Now, here's a cool thing. Since your swap is already in your account and paid, you can trade it. Okay? Now, if you earned the money in bonds, but you haven't hit the quarterly payment or the biannual payment, you're owed it. You're going to get paid soon, but you haven't been paid yet, so you can't trade off the future stuff. You have to wait. In Forex, you get paid every day, so every day you get money and you can actually trade that. Now, let's say you bought Apple stock. What's Apple? APPL or something? So you buy some Apple stock and you're up $30,000. Can you trade the $30,000? Your Apple position's up 30,000. Can you trade it? Can you buy $30,000 more of Apple stock? Or can you buy $30,000 of Google stock? Or can you buy yourself a low-end BMW? No. Really? Well, in Forex, you're already been paid. You can trade your 30K because it's floating P&L. You've already been paid, son. Do you understand? Like if you're running a hedge fund and you're competing against long and short equity players, that you're just absolutely ridiculously better off as a Forex trader? Like do you understand the advantage that you can trade your profits? Holy schnicker, and you're earning interest on your leveraged position. So that's how these like 1,000-to-1 interest payments, if you're not understanding what I mean, like that you're earning 500% a year, and you're like, what do you mean 500% of the year? How can you possibly do it? Well, if you're leveraged 100-to-1, you can borrow $100 for every $1 of your actual cash you use as collateral. But you're getting paid on the $100. You're earning interest. So you might earn 5% on your $100, but you only ponied up $1. You see what I mean? So now you're earning 500% on your dollar. So I mean, it's like, it's sick. It's ridiculous, but you know what? Amateur traders don't know anything about it. They don't trade about it. The brokers give them bad spreads because, again, they don't know anything about it. They don't care about it. They don't need all this kind of stuff. So I'm showing you a trader's way. You have a massive advantage because you have such amazing swaps. I mean, just to put it this way, if you had an opportunity to make an investment and you're guaranteed to earn 1,000% a year in income on it, now maybe its valuation will go up and down, and that's a whole different story. So put it this way, what if you bought a rental property? Do you know what the value of that rental property will be 10 years from now? Will it be higher? Will it be lower? Will it be the same? No, you really don't know. Now, if you time everything right, it should go up in value over time, but you don't know what it will be, and you're not guaranteed to make money. There are millions of people that lost money on real estate recently, right? So you don't know, but that's the valuation. The house barely changes. The house or whatever, the building is the same building, is the same building. The location is the same location, is the same location. Maybe the demographics change over time, but the building is the building is the building. The building can go up in value even though nothing has changed in the building. So if you buy a foreign exchange, right, so you buy Turkish lira, let's say. Turkish lira is Turkish lira is Turkish lira, right? I don't have any Turkish lira on my desk. Too bad. But like the bill itself, right? Like $100 US. I probably have $100 on. Let's see Uncle Wayne's. 20, 20, 20, 20, 20, 20, 20, 100. All right. $100. Nice. All right, $100. What's this $100 going to be worth in 10 years? $100. $100 is $100 is $100. Like a rental property, a building or a house barely changes. Now they might reprint a new bill and it'll be slightly different. That's the one with the nice security thing on it. Okay, won't change. What can I buy with it 10 years from now? Oh, I don't know. Oh, I don't know. I might be able to buy nothing. I mean, candy. Or I could buy a lot. Okay? So we're not guaranteed, but I'm guaranteed $100 will be $100. So what I'm trying to get at is, like rental property, you don't know what the valuation of the building is going to be worth in 10 years. But you do know what rent income you're likely to earn. Now, rent might go up 2% a year, right? So when someone moves out, a new renter comes in and you charge a little bit more. You can model all that cash flow out, but you know the income. And you probably know your expense. You borrowed some money at 5%, so you got to pay the bank back. Plus, you know your net operating income, right? So you got to pay your expenses, right? So you collect rent, you pay expenses, you pay the insurance company, you pay the gardeners and all that kind of stuff, and save a little bit for a rainy day in case the roof leaks. Okay, all that's great. And then so now you got your net operating income, and then you pay your mortgage to your bank, so they take a little bit, and at the end you got some cash. Great, but that has nothing to do with the value of your building. You see what I mean? The value of the building could go up over time. It might go down over time. But meanwhile, you're collecting rent. You don't really care. What if you treated Forex that way? What if you knew you made $1,000 for every $1 you put in every year? Right? That's not a great example, though. It's more like I guess it's closer to a bond in that sense, where you're like, at some point, you're going to get your investment back. Now, over that point of time, again, you don't know if your $100 still buys the same amount of stuff as it did 10 years ago. But what you do know is you're collecting $1,000 a year per dollar back. Okay? Oh, yeah. Okay, Andrew brings up something. Something. If you trade poorly, you're going to lose money. Oh, yeah. But here's the thing. And God forbid it happens. But let's... I'll stay on W2. Okay. Let's say you sell here. And price goes up. You lose money, right? Cool. If you sell here, this is your plan, but it goes up, you lose money. So what do you do to mitigate that risk? Use a stop loss. And you get out and you lose a little bit of money. You take a small loss. Okay? By the way, small losses are your best friend. Okay? So I'm not talking about well, I guess, put it this way. It's always the case that if you make a poor trade and you're in a losing position, get the hell out. Okay? So I'm not saying like do some retarded loser trading. I'm saying trade like anything else. You're supposed to trade in the direction of the trend, and then move your stop, move your stop, move your stop, move your stop, move your stop. Okay? The difference is if you're in a good trade. So like I used to earn 8% a year on Kiwi yen. Okay? Long. Times 100 to 1. So on my one, I earned 800% a year. The way that it worked is I borrowed money from Japan and I owed them 0.5% per year. And then I took that money and invested in New Zealand, and the good people of New Zealand paid me 8.5% in income. So I pay my carrying costs, my loan, just like if you own an apartment building and you have a mortgage at a bank. You're collecting income from the renters, you pay back your mortgage, and everything else goes in your pocket. So at the end of the day, on my $1, I was earning 800% a year. That doesn't make up for the fact if you're losing money, 1 pip, right? So it's like earning on this trade. I'm going to make an example. It's going to be roughly accurate, but not perfectly accurate. It's like you're guaranteed to make 8 pips a day. So if you're down 375 pips because you're in some stupid trade because you said, oh, well, Wayne told me to make 800% a year on my trade, so I'm losing hundreds and hundreds and hundreds of pips. Well, dude, you're not understanding, right? And I'm not saying that's what you're saying. I'm making a point. You're supposed to be in a profitable trade. If you're up 375 pips, you might want to be into this income. Okay? This is wealth. This is income. Okay? Okay? Does that make better sense? But it's never, ever, 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 ever acceptable to be in bad trades and not do anything about it. Okay? It's never acceptable. But if you're in a winning trade and you're letting it run, so like here's one. Okay, here's one. Let's go to the daily. All right. So I'm short here. I'm short here. And okay. And price did this. Down, down, down. We're down here, and then it kind of came, and now it's a little popping back up. Okay, so I'm making and losing pips every single day. But every single day, I'm earning interest on this trade and on this trade. Okay, how much interest am I earning? What is this? Euros are? No, Euro Lira? Euro Lira. Euro Lira. I'm getting paid 1,800% a year. Say what? Yeah. Say what? Yeah. As long as I'm short, I'm earning 1,800% a year. But I'm up here. Notice my stop losses are at break even. I have a trade, stop, trade, stop. I can't lose money. Now I could take my money right now. Sure, that's absolutely true. But I could also sit on this for 25 years earning 1,800% a year. Okay. You see the point I'm trying to make? Amateur traders don't even think this way. Now, if you truly trade, like once you go through the training courses, once you go through the live training, what you'll see is that you'll have like trades here, 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 and here. And the other ones got knocked out because of these upward moves. So like down, 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 you probably trade, 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 knockout, 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 trade, 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 knockout, 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 trade, trade, trade. And at the end of a year, you could have 47 trades short, right? Earning 1,800% a year. I shouldn't exaggerate. 1,750% a year in interest. Plus pips. Okay. But it only lasts so long. Oops, wrong one. It only lasts so long. So like if these were like mini lots type stuff, I'll give you an example. In that case, This one's probably up like $700. The other one's up probably $400, right? And I've earned $80 in interest per mini or something, right? Per trade. And the other one I probably earned 60. So you see the issue? You're like, it's great money, dollar for dollar. It's fantastic money on the income. But I'm earning like bajillion times more in pips. Okay? But the interesting thing is this will add up over time. Okay? It won't compound because I'm not retrading, but whatever. Okay? I don't have to. So imagine you got 10 trades on and you're earning 17 pips a day in interest payments. Right? Then you're like, oh, well, I'm making like well over 100 pips a day sleeping. Yeah, that's what I said, 1,800%. Okie dokie. Bit of a rebound on the dollar today. That's just sort of an exhaustion move, I believe. So we'll see if these things reset. Okay. Let's do this on an hourly. Okay. So buyers would enter in like this. So I don't know if that's next week or not, but pretty straightforward stuff. Well, yeah, well, here's the thing, Michael. You don't get paid to borrow money. You earn income from investing the money. So like in the old example I gave with yen, I would borrow money from the Bank of Japan, and they said, you owe us 0.5% per year. I'm like, okay, cool. I agree to that. Was that right, Jonathan? Holy smokes, it just hit 10K. Gee whiz, that's crazy. Anyways, so you have to pay that. You owe this. This is a cost. Okay. Now you buy an asset. Consider it a bond. You buy a bond from the Reserve Bank of New Zealand. Okay. So you borrowed the money. Now you have the money. So with your money, you decide to buy a bond from the Reserve Bank of New Zealand. And it has a coupon payment of 8.5%. Now we know that the value of the New Zealand dollar can go up and down. We know the value of the Japanese yen can go up and down. These are risks, but what we know is you will get paid 8.5%, irregardless of the valuation of the Kiwi. You will get paid the 8.5%. And you, irregardless of the valuation of the Japanese yen over the course of that time, you owe the Bank of Japan 0.5%. So what you know, your carry now, this is your carrying cost. The differential, right, is 8.0%. Okay, you're not getting paid to borrow, you're getting paid to invest wisely. So if you reverse this, you're not getting paid to borrow. In that case, you would lose 8% if you borrowed New Zealand dollar and decided to invest into the Japanese yen. So if we have a risk-off scenario and global macroeconomics are contracting, if you sell back then, this is the old days, but I definitely did this. But in the old days, if I held a Kiwi yen short for a long period of time, I had a negative carrying cost, 8% a year. So so the way I handled this is I would swing long and spot short. Okay, so I'm in for weeks long, and I day trade short. Okay. Oh, really? Yeah, hey, thanks, Jonathan. I don't mind stuff like that. Super busy day. Oh, am I only leveraged 10 to 1? Yeah, well, this is just a small, this is my coaching account. It's only got 30 or 40,000 bucks into it, so I didn't even pay attention to the leverage. So, anyways, but that's interesting. Irregardless, I guess that makes sense. Yeah. I don't know what else to do. I think we're done, actually. I think we're done. There's not much more I can really do. I mean, I'm going to go away for a long time. So let's just wrap up the, here it is. This is the page to get the discounts to summer school. So I will be away for about a month. This will take you probably almost 2 months to get through. Okay, so you notice that you're saving about 60%, 62%, a little bit more than that, actually, about 60% discount. So I think that's pretty fair, pretty cool. Again, the major difference is one is video only and the other one is live training. One-on-one, group training, performance analysis. But, one is you kind of do on your own time and you go through in your own order and when you want and study what you want and all that kind of stuff. The other one is super organized, super focused in a particular order with tasks you have to do and homework and group meetings at specific times with specific lessons in mind. So one is like totally live, some group stuff, lots of one-on-one stuff, lots and lots of homework and responsibilities and due dates and like, wow. The other one is, in my order, when I want, what I want. So it's up to you. Okay. I'll be back later, end of July. The videos, I believe it's a year. Yeah, Harvard. Little school called Harvard. Oh, I have a business card right here. Just in case you think I'm a hacker, you can scan that. Yeah, I'll do NFP. I'll do NFP. I might try to do a couple of surprise webinars. The thing is, I don't really know, right? I don't really know the situation. Yeah, the live training, some of it is group work, like setting up trades with a specific methodology at a specific time, like London Open. How do you set it up? How do you identify support and resistance? Create the little zone? How to use price action? How do you confirm the integrity of the setup and then actually pull the trigger and take the setup? And you probably would need to bring your own trade plans. You might actually be asked to do the trade plan live in front of the group, all that kind of stuff. Reviewing of your personal performance and analyzing your own strengths and weaknesses. Uploading evidence of you taking very specific types of trades. So you might be asked to upload 10 examples of you trading a reversal pattern over the next 5 days. And you actually setting it up and taking the shots and taking a screenshot and uploading, explaining what you did and why you did it. Like I'm telling you, when I tell you that Forex isn't necessarily rocket science, but you need a ridiculous, sickening work ethic, this will test your ridiculous, sickening work ethic. Okay? This is no frickin' joke. The live training is no joke at all. It'll rock your world. You might not be ready for it. You might walk out of it going, now I know what it takes, and I haven't been giving it that. You might think, you're a monster when it comes to your work ethic, and you might find you're a mouse. And you might go, holy snap! Like, oh my God. Right? Like, seriously, that's what this is. This is learn as you go at your own pace, do it again if you want to. There's no exams, there's no homework, but, you'll learn it. And, I get to know swing trading and price action and learn how to scalp and how to do a market open. And, I'll go through my technical analysis. Oh, that's really nice. I know how to do an oscillator. But look, if you don't know that stuff, you don't got jack. So if you haven't done this, I wouldn't do the live stuff. You're just not going to be able to hack it. You're just not ready. But if you've gone through the video stuff and you've been trading for a couple of years and you think what it's got, do the live thing and it'll be an eye-opener. You will learn a lot about trading, but you'll learn a lot about yourself and you'll have a very good idea of where you need to go and what you need to do. But it's not going to be fun. And right, this is like, no joke, a real boot camp. This is you crawling in the mud through pig guts under barbed wire and people firing 50 caliber machine guns over your head. But you'll come out strong and confident and ready to battle anyone. Okay, is that a good description? So if you're all talk, yeah, I'm disciplined. Yeah, give me the next trade. You got to be patient. Yeah, I'm patient. You got to be a hard worker. Oh, yeah, I'm a hard worker. Yeah. Yeah, I'm a hard worker. You'll find out what it's going to take. And you might not be ready for it. So, welcome to the world. Okay? Yeah, that's right, Michael. So, like, there you go. So I'm going to go away and study macroeconomics and financial management. The classes are designed specifically for my group of 10 people. The head of Harvard Business School PhD program is my professor. I'm an elite program. Out of, let's say, the 5,000 people in Harvard Summer School, our group of 10 does twice the amount of work than everybody else, and we do it in half the amount of time. Do you understand? So what does it take to graduate with honors from Harvard, an elite program of executives? Not some like weekend course that people pay $10,000 to go to and like, I have a certificate from Harvard. Like, no, you went to Harvard for a weekend. Like, what does it take? It takes a ridiculous, sickening work ethic to do twice the amount of work in half the amount of time. But maybe that's what leads, to success in Forex. I don't know. But this will be a test, guys. Just if you sign up for the live training, just remember, it might be an eye-opener. You might not have the work ethic. And you'll say, oh my God, maybe that's why I'm not ready. And now you'll know what it takes. No, it's 7 weeks, guys, 7 weeks. 7 weeks of live coaching. And I don't think you'll ever see that price again, by the way. Just if you want to know the God honest truth, this is it. You'll never see this price again. Ever. Not in 6 months, not in a year, not in 2 years. No, absolutely not. This is retarded. That's a retarded price. I swear to you, I will not do it again. Okay? Anything else? You choose videos or sign up for boot camp. One or the other. How long the sale? I don't know. Peter says he did the live training last year. Ron's the man. Yeah, like, I'm not joking. You will be put to the test. Yeah, it'll take 7 weeks. It's very structured. So if you go to the page, guys, and you click on it, you'll get some information, right? But it's very, very, very structured. You're going to have to make sacrifices. You're going to have to do homework. You're going to have to learn. You're going to have to do it. This is it. That's what it's all about. You're going to have to like step up and be a currency trader. And it's not going to be fluff. Oh, Peter's going to do it again. It's one of those things, like, no joke. Yeah. So anyways. All right. Well, I guess I got to go. We have someone very upset that I'm charging money for this. All right. Well, next time maybe it'll cost 2 goats and a virgin or something. But anyways, where I come from, money is required to do pretty much anything. So when you have to pay salaries, someone's got to do it, right? So whatever. So I apologize. But yes, Harvard charges me money. So anyways. It was designed by Ryan and I. Ryan is the man for the live stuff. Rock your world, man. So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you very much for being on my team. Thank you very much for being a client to Trader's Way. Be very patient. Be very disciplined over the summer. I would really think about how you want to trade and behave in a period of low volume and low volatility. I would suggest either trading less. I would suggest maybe trading smaller time frames. I would suggest trading smaller lot sizes. But the absolute worst thing that could happen to you is you get frustrated that none of your trades are following through. You get frustrated that the technical analysis isn't working as accurate as you're used to. You start pushing trades and you start pushing to make money. And I come back from summer and you've lost 50% of your trading account. And I say, well, how could you possibly lose 50% of your trading account when nothing happened over the course of the last 7 weeks? And you'll say, oh, well, I forced it and I pushed it and I know, Wayne, I should not have done it. I know. But do not lose a lot of money over the summer, guys. So think about how you want to behave. Write it down. Make a contract with yourself. How will you behave if you assume lower volume and lower volatility over the next 7 weeks? How will you behave? Because the choice you make now when you're trading, let's say $10,000, will be very similar to the choice you make when you're trading 100 million. What would happen if you lost $27 million during the summer trying to push the market when no one was in the market but you? Well, you'd get buried between the sand dunes, right? Somewhere between Abu Dhabi and Dubai. You'll be watching the sunset and say, man, it was a rough summer, but I think I got out of this. And then whack! Sunset's over. So don't lose money. Don't lose money. Be smart, be patient, be disciplined. Be the trader you want to be so that you become that trader. If you want to be an amazing trader, start today. So again, peace on earth. May the pips be with you. May your profits be above average. Swing traders, we need to do a quick group meeting, and then I'm gone. I'm in Cambridge. Take care, guys.